Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, I am introducing a new company to the show. The company is called Sage Potash, traded on the TSX Venture Exchange under the symbol SAGE and on the OTCQB under the symbol SGPTF. I am chatting with the executive chairman and CEO Peter Hogendooren. Now, Sage Potash holds a large land package in the Paradox Basin in southeastern Utah. We're going to talk more about, at least initially, the company's strategy of moving into early stage production in terms of pilot plant production. Now, there are a number of stepping stones the company still needs to undertake, but I'll get Peter to walk us through those one by one. Peter, let's start off again with the overall strategy here of the company taking its project into a pilot production. How is that all going to work?
Yeah, thanks for having me on board, Corey. Yeah, I've been involved in this project for 10 to 12 years as a project generator initially. We initially financed the initial hole, the production hole, with a joint venture with a company that had a lot of money in the till, about $16 million. They drilled the hole, they took our data, they bought 270 kilometers of 2D seismic. They enlisted one of the top engineering groups on the planet for potash development. They spotted a hole, drilled a hole, and they intercepted a very, very significant, commercial attributes, sylvinite bed of potash, very high grade, very low impurities, no insolubles, no carnallite, so very flat geology. So all these things that as a private, well-funded company, many mines have gone into production on one hole like this. So a hole like that gives you a massive amount of material that you can begin production with. Yes, more drilling can be done, and as a matter of fact, another hole has been drilled 2 miles away that we can allude to a little later, but that has intercepted the potash on the same dip. So that's an important kind of a tickler that's kind of out there that we already know that the 2D seismic kind of indicates that, but nice to have a hole that we can re-enter. But at the end of the day, we went public, as a lot of companies do, with the intention of raising money to advance the project. This is probably one of the worst markets we've that I've ever seen. And certainly for junior miners, it's a wasteland. The tide has kind of left the bay. So our strategy to go into short-term production is basically been done for a couple of reasons. First of all, there's been a lot of projects come and go that are mega projects. They're greenfield projects. They're 500 million, $2 billion deals, and they take 10, 15 years to advance. They spend, $200-300 million before you're even going into production. And that just hasn't worked as a model for investors in the past, nor has it worked very well for potential strategic partners because they've seen too many stories that have this massive promise and they don't go anywhere, or certainly there's a lot of sidetracking going on. So in our management team, we've got some really good potash experience, solution mining, cavern development. So what we've done is we've advanced our engineering and permitting, and we've got two permitting programs underway that are in parallel. One is a permit application to drill 3 holes. They're on the same 2D seismic line as our original hole, or about half a mile north. So we're really not expecting any significant surprises in terms of, this is essentially an ocean bed. You're not going to see, you shouldn't see at that depth anything that's going to be, certainly at the chemical side and the rock mechanics side, shouldn't see a whole lot of differences. But the idea then is to take these holes, and one of them, we already have the water access, which is a major de-risking advancement for the project, to have the brine access to, which is essentially your production medium. So we have water access, so that'll be one of the holes. Then the second hole will be a cavern development hole, and the third hole will be a a waste disposal hole. So essentially, those three holes light the fuse to go into pilot production. And the idea is that the data from those holes, or one of those holes, together with our final plant design and engineering, then dovetails into what's called an LMO permit, large mine operation permit. So both these permits are in parallel and are moving. We actually do have the approvals to drill those three holes. So our intention now is to go to strategic investors, people that actually care and understand what we've got here. To go into 50,000 tons, we can do that for somewhere in the 30 to $40 million range, and the project is essentially de-risked at that point. And so to that end, we have entered into a relationship with ACP out of Stamford, Connecticut, that has a very, very proven track record in the ag business in the whole sector, whether it's infrastructure, whether it's crop development, whether it's transportation, intermodal terminals, and things like that. So they've got a great track record, and as a result, their universe of investors, they're all people that understand the importance of having a local potash source. You can look at it from the extreme point of view that supply chains are more and more sensitized or sensitive to wanting to have internal supply chains as opposed to foreign supply chains. That's one issue, but there's just even the cost. When the pipelines were canceled, rail freight has gone up tremendously, and so by being local, we can save regional customers and strategic partners. We can save anywhere from $75 to $150 a ton in freight and storage. So we can do just in time. We can do precursor material. In other words, we can do standard powder as opposed to granulated. But at the end of the day, we can show the regional players that we're serious about this, and it's not a 10 or 15-year project. And we can essentially de-risk the whole project for $30 or $40 million and be in cash flow. And while they're watching this, they can kind of see themselves and kind of see what our timeline is. Okay, well, if the chemistry is good, the production is good, you've got a great product coming up. Where do we fit in? How do we kind of put up our hand and determine whether you're going to grow from 50 to 150 or whether you're going to go from 50 to 450 based on that kind of interest that you're going to have watching this project. So that's kind of what this is all about.
All right, Peter, let's go almost stage by stage through here just so we can get a little bit more of a time frame outlook, starting with the time frame of the drilling of these upcoming three holes, these holes that sounds like they can kick off the permitting phase. When do you think these three holes will be drilled?
Well, it's all dependent on financing, right? So it's about an $8 million project to drill these three holes. Once those three holes are done, so I would like to think that 60 days, 90 days from financing, we can have drill crews, or we can have iron on the site, and the surveys are done, the locations are established. So we've got to update some of the quotes. So that's what we're in the process of financing at the project level, so that we can do both the drilling and start acquiring and finalizing our equipment bill of goods.
Okay, then moving into permitting after those three holes, how long do you expect permitting to take before you can build that pilot plant?
Yeah, so engineering is still underway, but for 50,000 tons, we're quite advanced on it. We've got to have, we've got most of the PFDs, or the process flow diagrams, done, and the costing of it. Now we've got to basically get into the actual infrastructural design and engineering. That's probably going to take half a year, but the drilling is going to take 3-4 months. So that all in will, once we submit all those designs and engineering, at that point our LMO permit can be fully assessed and approved. So it'll be sometime late next year, I would think.
Now, in terms of a pilot plant, how much do you anticipate a pilot plant costing? How long will it take to build?
So there's a range. I think if we did everything with brand new equipment, we're probably, above ground and below ground, you're probably looking in the 35, $40 million range. That being said, once you're financed, there is a significant opportunity to acquire, previously purposed or, used equipment. There's about 13 different minerals and chemicals that are produced using similar kinds of process flows and tanks and centrifuges and heat exchangers and crystallizers. So we'll be on the market to aggressively kind of see what we can do to bring that cost down, and that's a real opportunity. So, and that's one of the things we're going to be doing that we can do with a pilot project. You can be a lot more creative in the process of your operating procedures. So it'll be, we can kind of look at that as the opportunities present themselves. But if everything's brand new, custom fabbed, and all the right steel grades and all that good stuff, it'll be, probably closer to 40 million bucks.
Okay, but the key on the back end of that pilot plant is that you assume this will make money for the company as well as further prove that you can produce.
Yes, exactly. Obviously, we've been doing a lot of work towards a PEA. We're probably going to go right from what this pilot project enables us to do is to go right to a full feasibility, right to a 250,000 ton or a 500,000 ton full on feasibility. But you're going to do that with real world inputs as opposed to theoretical inputs, and that's the whole point of doing this project. But we have done a lot of work towards the economic modeling. As we understand the deposit, we can be insulated from margin compression, primarily because we can save about $100 a ton in transportation costs. So whether the market goes down to right now, the market in the area delivered is somewhere between 450 and 525. A year ago it was $650, $700 a ton. We've stressed the economic model, 350, 450, 550. It's got great margins. So we're quite confident that'll be demonstrated in this. We can demonstrate that to the strategic investors we're talking to.
Okay, let's talk about potential strategic investors then. As you mentioned, you have engaged ACP Capital for helping to, I guess, filter through some of these potential investors. What's the strategy of bringing on a strategic investor, and when could that happen?
I think it could happen soon. I think as soon as, we're already engaged. We already were engaged just on our own, just as, our own management. We do have some industry connections. And we do have a couple of interested parties. I guess our concern and the reason why we've gone to ACP is you really do need a third party to kind of maximize your deal tension without frustrating people. So everybody's working with a third party valuations, due diligence, all that good stuff. And the idea is to really hone in on the right one or two strategic investors. It's not just money. It's you want to have the right footprint. You want to have the right logistical connections. You want to have a number of different things that really benefit all the parties in the right way. So that's what we're in the process of doing is kind of targeting those people. PE funds and debt is not going to be an issue. I mean, actual money is not the problem as much as it is having the right money.
Now, what about building the resource? Because again, there's just one hole put into this. It built out that resource. You mentioned one more hole drilled miles away, but the three holes that you need to drill in the near term, those are more for that move into production. Are you going to go about drilling some other holes to build on the current resource?
Well, sure. I mean, those three holes will change the resource calculation. It'll go from inferred to measured and indicated all by itself. However, the beauty of potash is that you can do your step out drilling is, three kilometers. We know of another hole that was drilled 2 miles or 3 kilometers away from us, southeast, all in the same. We that's our state lease as well. So, I mean, what people have to understand is that we have, combined with state and with private, we have about 30,000 acres of contiguous land where we can develop about 70 mining units. That state lease would be one of those leases where we'd go into production. But that is a hole that we could re-enter for very, very cost effectively because we know that they didn't find what they were looking for and they were looking for helium. But they did intercept the potash on the same dip as our hole. So we know that we can re-enter that and core it, and that will expand the resource enormously. Could triple the size of the potash. But even with the one hole we have, there is so much material there, we would never run out of. We'd never produce it all just with that one hole. But these three holes do give us a production ready resource calculation.
All right. Well, then, Peter, because it is your first time on the show, you've provided us with an overview of the company's strategy here. Let's get a little bit more in terms of a background on you as the executive chairman and CEO, and anyone else on your team that you care to highlight, please.
Sure. So, I've been doing mining and technology financings for 30, 35 years. Had some good passes, done a lot of mining deals. What I liked about this project right from the word go was that one hole gives you a resource, whereas if you're looking at gold or copper or silver or anything like that, you could be drilling for years before you've got a resource. So that was one of the reasons why I really liked this project. And the other reason why I liked it is because it looks a lot more like oil and gas production. I mean, your discovery hole can actually be your production hole, which is not the case with any other commodity or mineral commodity for sure. So I've been doing this for a long time. I raised the first $9 million to start the project 10 years ago. It was dropped at that time in that same sequence that many projects were dropped, multi-hundred million or billion-dollar deals when potash went from $700 down to $200. That's the reason why we're taking the strategy we are. The rest of the team that we've attracted, with not a significant reflection on myself as much as it is on the actual deposit. We've now got we've attracted Pat Avery. Pat Avery has been in the potash and phosphate and fertilizer, surface processing, engineering for his entire career. He used to be the president of Intrepid Potash. So he is. There's nothing about solution mining or phosphate production, fertilizer distribution. He has been critical in our strategy, helping us focus on a short-term production timeline as opposed to the Never Never Land program. So Pat's on the team. He's critical to everything we're doing. He's well regarded in the industry. People at senior management in many companies that he's got long-term relationships with. Then we've got Pat Varis. Pat has a tremendous track record of resource development. He led the exploration team that led to the Diavik diamond mine. He also led the exploration team for a large copper iron deposit in South America that was sold to Capstone for 1.1 billion. And he also founded Western Potash, where they raised $245 million and they basically proved up 3 billion tons. And they were forced to sell that basically on a fire sale to a Chinese private group. But so he brings a lot of experience in terms of how to do things and how not to do things. And that's really the process of life, is taking your experience and bringing it to bear to a project and a strategy that makes sense. So he is key. And we've got Ben Clegg. Ben's a chemical engineer based out of Utah. Been involved in 35 years of salt separation, processing, plant construction, all that stuff. So he's critical to what we're doing as well. So we've got a good team. We will be expanding based on that with this next round of funding. But that's really the core of who we are at this point.
All right, Peter, thank you for bringing us up to speed on this story. I will post a link below this interview to the company's website. And please, everyone listening, go through that company website, read over the presentation, and send me any questions that you have. I'll get Peter to address those. And I will also follow up with Peter as a little bit more news is released as the company does progress towards this pilot plant phase of production. Peter, thank you very much for your time today, and please keep me up to date as some of these catalysts fall into place.
Thanks, Corey.